Hey, how are you? How are you?
I'm doing well, buddy. How are you?
I'm good. I'm good. Did I catch you at a bad time? You said there's a bond auction now?
Yes, there is a bond auction right now, 10-year tips, but I don't know if it's out yet. It's not out yet. Normally, I wouldn't really care, but after yesterday's 20-year debacle, um,
Right.
markets are
Right.
paying
So
a bit more
so
attention.
we'll get to some things, but why don't you explain what happened yesterday?
So yesterday was just part of the regular Treasury financing in the U.S. It was the 20-year bond auction, and it went very poorly. And
Okay.
without getting overly technical, it just essentially is a result of poor demand, which is reflected in higher yields and poor metrics on the auction. And
Yep.
yeah, it just rattled the markets a bit because of this ongoing theme of, you know, whether we're seeing higher yields at the long end of the curve because of a divestiture of U.S. assets by foreign governments or foreign institutions, or whether it's a fear of higher inflation, whatever it is, it's very disruptive,
Right.
at different levels. I mean,
Right.
do you
So
want
we're
me to get
not.
into the technicals of why it was bad?
You can, yeah, if you want. I mean, we're
I
going to go
mean,
off. That's off topic a bit, but sure. Let's go
no,
into.
I
I
mean,
mean, 'cause
it's
that's
not. I
affecting.
don't
That's
think that it would
affecting.
interest your sort of regular listener, but essentially the bid to cover ratio is a ratio of like how many people are bidding to buy the bonds uh, relative to what they have to offer. So
Yep.
that was a high ratio, which just shows sort of you know less than demand, and
Right.
then what they call the tail of the auction, which is the difference between the average yield and then the highest yield, was very very wide. Which, and anyways, all
Yep.
of this is just symptomatic of poor demand, if you will, or demand that is requiring a much higher rate than what was expected
Right.
by the
So
market.
it's one of two things. We're not quite sure what it is, but it is signaling that there's still a little bit of stress in the bond market. Obviously, we're getting a little bit technical, but what I can say from my end, like we're seeing this real time. Like we've seen fixed rates tick up over the last 3 days, from multiple lenders, like day after day.
Mm-hmm.
So when you're seeing stuff real time on the U.S. side, um, it affects us, and we'll tie that into mortgage rates and mortgages later on. But we're seeing it real time. Like
Mm-hmm.
people that want fixed rates, like I'm getting rate sheets from lenders, and they're dynamically pricing. Like fixed rates are going higher, they're changing our rates, in our network almost every day.
So you're seeing your originators of loans.
Yeah. So the
Oh,
originators of loans are sending us rate sheet. They send us a rate sheet typically every couple of weeks. Here we are. If rates are stable,
these are the
nothing.
banks you're talking about, or you're
These are
being
banks. Yeah,
for the
these are
bank?
banks. Yeah,
Okay.
these are banks. And we're seeing like dynamic swift changes, like not just like every 2 3 weeks. Like what you're seeing real time yesterday is affecting us today.
Yeah, yeah.
So it's still, I guess the last time we spoke, there was still some stress in the bond market. It seemed to quiet down a bit. Now I guess it's a little bit still here.
Yeah. Oh, for sure.
Yeah,
No, there's
it's
no
still,
question that it's here. I mean, especially, longer duration fixed income is so much more affected by perceived inflation or inflation expectations. That's why the Fed's always talking about entrenched consumer expectations on inflation, right? Because
right.
they become self-fulfilling, and on a 30-year bond or a 20-year bond, it's a big deal, right? If inflation is has more of a longer term duration to it, or a perceived longer term duration to it, right?
Right. Okay. So let's get back to kind of what I want to talk about today. I know we'll talk about bonds a little bit later on and rates, but
Wait,
well, I mean, last time we spoke, we were just, coming into the last month, I think, of the election. We've got the election now done and over with. We've got a new government that I guess has a mandate, not quite a majority mandate, but pretty close.
Yeah.
And we've got some, I guess, the official, policy, handbook or whatever we want to call it is kind of out and what he wants to do. We'll see how quickly he gets it done or starts to implement things. Um, any thoughts? Any on how they basically rose back to power? What do you think of Carney yourself? I mean, I didn't vote for him, but so far, seems pretty practical. But we'll see if some of the Liberal Party is less practical.
Yeah. Yeah, I don't know. I'm to tell you the truth, was a little bit surprised that at what happened, but I think that it comes down to two big things. One was, I think Trump's behavior, in his first month or so in office, just scared the entire world, and we just happened to be in the unfortunate spot of being in an election, and that made Canadians in some way think that Polyev was either too much like Trump, or that he couldn't handle Trump. I don't know, but whatever. The Trump effect to me was what swung the election.
Right.
And I think also, the Canadian people. It would seem that the Canadian people were less disenfranchised with the Liberals, then they had this hatred for, or not hatred, it's a strong word, but dislike for Justin Trudeau. Like it seemed to be really a Trudeau thing, and not a Liberal thing.
Right. I guess that's what can be taken out of all of this. That
I think, that Trump I think that the Trump effect for the most part was the big vector that swung. I think that he's really scared Canadians with the way he was talking, and the 51st state and the tariffs and all this stuff. And I think that just sort of the average person looks at Carney and sees someone with a lot more experience, a lot more polish, a lot more statesmanship, and has a lot more confidence in him being able to deal with someone like Donald Trump than Pierre Poilievre. I think that's what it came down to. And also a lot of what, I think it's a wrong association, but I think a lot of people tried to make Poilievre seem like a populist or some type of a Trumpian in nature, when I don't think that's the case at all.
Yeah, I didn't think that was the case either. I think, we can debate. People are going to debate. I don't think media portrayed Polyev in anything but a populist. I think he got the short end of the stick there. But anyway, we do have somebody with a lot of experience. We'll see if he can put into practice what kind of he said he would, because while he's a Liberal, it sounded like he was moving a little bit more towards the center from, I guess, the previous incarnation of the Liberals under Trudeau. I'm not sure. I mean, it might have to keep his caucus under control. It seemed to be sprouting different messages every
He said what he had to say to get elected, and now we'll see.
We'll see. Yeah,
those guys threw Trudeau under the bus. It was incredible. It was like they went from supporting him and his outrageous policies that were really adversely affecting the country, to from the time he resigned to not even wanting to talk about him, to saying like he's gone, let's not talk about him.
Yes, incredible. Let's not run on our past record. It was all him. It was all
the party was like it was.
That's what surprised me. I mean, I mean, we'll get into, CPI and monetary policy and effects on mortgages and stuff. But that's what surprised me the most about the election, I think, was that they didn't give the Liberals a pause. And they just really,
Yeah,
the Canadians were just like, it was all him. Like,
yeah,
threw
yeah,
back because they got more votes or more seats than they had at any time under Justin, right?
yeah.
Right. So, I mean, it's kind of weird. I guess the Trump factor, as you said, really, really scared people. Putting somebody into place that has kind of a presence on the world scene, I guess, was important. And I guess we'll see what, if anything, he can change or bring to the table that, Trudeau couldn't. I mean, we're going to deal with some kind of, I guess, unity crisis here if he doesn't do some things, that Alberta kind of wants or needs.
It's
I
not
mean,
only Alberta. It's really like the Liberals continuously are voted into power by the two big urban centers in Montreal
yeah,
and Toronto.
yeah,
And like I don't want to get into a debate on where how the electoral, not the electoral map, the seating should be relative to population, but you look at the like Montreal where I'm at, it was solid liberal. There was
yeah.
one seat that went to the Bloc, I think, and Toronto is very similar, right? And so
Toronto's very
all these
similar.
people out west that they don't have any. The Liberals have no one votes for them in the southern part of Manitoba, anywhere in Saskatchewan, pretty well nowhere in Alberta besides a seat or two in Calgary. I didn't look how Calgary went, but so the Liberals don't represent people out west whatsoever.
No,
Outside
no,
of Montreal, they don't even represent people in Quebec because the rest of Quebec is Bloc.
right,
And so
right.
they continuously get into power, and
Yeah, it'll be interesting. I think this. I saw somebody say that the next 2 years, like he might wish, Carney might wish that he didn't come to power. We'll see. Like just the amount of heavy lifting that needs to be done for our economy.
yeah,
Dealing with the orange man down south.
yeah,
Um, it's going to be tough sledding. Hopefully, he's the right person for it, and
yeah,
we'll see how it goes. So, I guess the tie-in. First, we can talk about. We talked about the bond auction in the U.S. and rising interest rates.
right.
I mean, we had a CPI number this week, consumer prices. That headline was down, but some of the measures actually,
Yeah, the core was up
the
0.5.
core was up quite a bit, right?
Yeah, the core was up a lot. It was up 0.5. Yeah, it was not a good.
It was not a good CPI, and that obviously had some, in my business on top of what's happening down south. Our core numbers being stronger pushed interest rates up a little bit, at least fixed rates.
Yeah,
Do you think, like, we'll get into Carney and the Bank of Canada after, but do you think that the Bank of Canada is going to look past, these numbers? Do you have any sense, like the last couple of, I guess, speeches, or maybe it was a month ago or 2 weeks ago, where they kind of hinted that they might look past some of these scarier numbers a little bit?
I think the bank is close to being done. Like my feel is that they might not even go at the next meeting, and most of my speculative call on that is that their new. I think they feel like their new neutral rates. The neutral rate they want to be at is somewhere around here, right?
Right.
And so when you're at 275, uh, is it a big deal? Like, are you really going to move the needle on economic growth if you go to 250? Maybe. Do they want to go south of two? I don't think so. Like, I think that all central banks are would say that the zero interest rate policy, or like let's say a range from 0 to 100 basis points on overnight rates, is a thing of the past, and that they're going to find neutral rates to be more in the 2 to 3% area. So I think the bank is kind of 50 basis points away from where they might want to be neutral,
Yeah.
and you want to keep some dry powder if you really do face like big economic headwinds. We are getting low reads on GDP, but is it really going to move the needle? Like I wonder if they just see it as not really something that's necessary.
Right. Right. So what? I mean, I think there was a 50
Dollar's holding
high.
up too, by the way, which is a big thing,
What's
right?
that?
The
Sorry.
dollar is holding up quite
Yeah,
well too, which is a big thing,
which is a good thing.
which
I
is a good
mean,
thing, which helps them too to sort of, not,
right. So a lot of this move in the last CPI was food prices, right? There was food prices and a few other.
no, the core was what really moved. Well,
Yes.
it's again, it's a month over month reading, right? So
Yeah.
you have to take it with a grain of salt, because it's only a 1 month reading. Uh, but and it's also like the readings are all going to be completely all the economic data that's going to come out in the next like for I don't even know how long, maybe even a year, is all going to be skewed, right? Because of the tariffs. Uh,
Right.
like the tariffs, there's no way around it. Like just from a math standpoint, when the government's coming in and taxing goods at like I know it's like for us it's like on different goods it's different rates, but if there's a global tariff system in now that's raising the prices, the only way for that to not be inflationary is if the businesses themselves absorb those prices, which they never have, and they're not going to.
They're not going to.
No matter how much President Trump whines and threatens Walmart, with your customers are watching and I'm watching, you better not raise prices. They're like, they're going to raise prices. They're not going to, you know, sacrifice their profits. They're going to
Yeah.
raise prices, and so that creates all kinds of distortion, not only in like inflation numbers, but in the way like we saw the U.S. GDP numbers for the first reading on the first quarter numbers. The GDP were negative in the states, right?
Yeah.
Or were they negative, or they were just below what they were supposed to be? What were they? They were, I think they were negative, weren't they? I should have. Anyways, and it was because of the essentially because the U.S. businesses went out and imported a lot of goods ahead of the tariffs, and when imports rise, it decreases GDP because of the way they calculate GDP.
Yeah.
And so, anyway, so that type of a distortion creates a number that it is real, but like Powell was talking in his press conference, and he was saying, you know, uh, now that a lot of the tariffs are in, even though they're low at 10%, that net import number is going to go way down, which is going to make first quarter GDP much higher and make it look like we're economically stronger, right? And the
Right.
point is not in what the GDP is that
The numbers are all over the place.
they're all over the place.
Yeah.
They're all over the place.
Yeah. So going back to, I guess, our CPI and what you mentioned, like I thought about this for a while, and 50 bips maybe this rest of this year, 75 when things look horrible, quarter only when things were better. We're somewhere between a quarter and 75 bips, let's say, till the end of the year. For June, it's June 4th, right?
I
Is
think
the
it's
next meeting?
the 4th or the 12th. One of them's on the 12th and one's on the 4th. Yeah, it's June 4th. Yeah,
So
and
on
then the
June
U.S. is
4th,
2 weeks later on
right?
the 18th.
So June 4th, what are they? If you looked at your screens right now, what are they? What are they predicting?
Uh, they are predicting a little less than a 50% chance.
A little less than a 50% chance.
Yeah.
Okay, so they were in the 60s at least, I would assume, before CPI, and
Oh,
then
they were
CPI
even higher. They were, I would
higher
say,
than
there
that.
was almost like not 100%, but there's different ways to calculate it, but like, yeah, north of 75% chance they were going to go,
Right. And now we're 50-50, or just
a
under
little
50.
bit less, I would say. I would say like
Right.
40-60, depending on what day it is, and things always move, but yeah, less like if the meeting was tomorrow, I would bet that they're not going to go.
Right.
Yeah.
So we've still got, what do we have left this month?
What
That
are
could
we?
move the needle aside from
Nothing.
any, Trump
Nothing.
headline or any. We've got nothing important. There's no jobs number before the next
Hold on, let me check
meeting.
the calendar. No. So the jobs number will come out like 2 days after the meeting. Yeah.
Right. So they might be able to take that into consideration. I
I mean, I
assume
think it's one of those meetings where if they go, no one's going to, point the finger and say, "Oh, you shouldn't have gone." And if they don't go, it's going to be the same thing.
right,
Um,
right,
the one message that's come out clear from Macklin is that it's such a unique environment in that they don't know really what's going on, and even if policy was set and we knew what we were dealing with, it would take a while to see how it's playing through. Because don't forget, like, we're tariffing them too, right?
Are we?
Yeah, we have reciprocal tariffs on.
No, I know. There wasn't this a little blurb the last week or so that we are not reciprocating on the tariffs, and
I
that was
don't
in
know.
the news. Like elbows up, elbows down.
Well, the auto
Okay,
industry is
or not.
being tariffed. That's at some levels. It's unclear on. I don't do enough deep diving into exactly what it is, but aluminum and steel is being tariffed. So um, I don't know. I mean, we have to see. We have to see, right? You know,
Right. Yeah, I don't know. It's
we
so
have to see, and I think that the bank is sitting back and saying, "We don't really know. We don't know
yeah.
what this looks like."
Yeah, and and you made a good point. Aside from drilling rates to zero again, like what's another quarter point going to do? What's another 50 bits going to do?
Yeah,
You might as well err on the side of caution.
and they have to, and they
People,
have to. You have to leave dry powder for a crisis, right? Like,
yeah.
what if we really slow down and we go into a recession? You know,
So that's a good question to lead into my. That's a good statement to lead into my next question. Are we not already in a recession?
well, a recession is defined by two consecutive quarters
Yeah,
of.
I know the legal definition of a recession, but are we not kind of there? Like
I don't know. I don't know. I
jobs
don't know.
wise, like Ontario is hemorrhaging.
I don't know.
We're
I only
we're
know anecdotally, right? Like, what we've
we're
hearing
close to
about.
8% in Ontario now, and our jobless rate, and Toronto is even worse.
Hmm. Yeah,
So
I
I
don't know.
mean,
I mean, Canadian GDP numbers are released month over month. They're, I would say, like, almost statistically inaccurate, irrelevant, if you will, because they'll come out one month at negative 0.1, then they'll revise it the next month to like plus 0.1, which makes it almost like irrelevant. Like, there's almost like a lag to understanding Canadian economic numbers. But I don't know. I mean, I don't know. I think if you'd ask, like, what would you think when you talk to people in your circle,
but I think people in my circle are hurting. I mean, from the ground, like boots on the ground, my business, people I talk to on a daily basis. Life's hard. Trying to make ends meet. Trying to pay the bills. Mortgage rates are not low enough, I think, to cushion the blow. Well, they're
yeah,
not. They're not really high like they were a year ago. They're still not quite back to where people need that extra cash flow.
yeah,
Um, as I said, jobless rate pretty stinky in Toronto. I'm in Toronto.
right,
Pretty bad there. I don't really know who's hiring, and don't speak to anybody that says they can't find people anymore. I think it's more firing than it is hiring.
really,
Um, so I don't know. From my what I see, I think people are struggling. Um, Obviously, there's lots of people that have money and good jobs and a lot of wealth in Toronto. I know Montreal, same, Vancouver, but boots on the ground. I would say it's we are in a recession, but who knows? I don't know. I agree with you on the month over month stuff. Is like, what do you believe? What don't you believe?
Right.
Like,
Right.
jobs are still skewed by government jobs, and private sector jobs are not great. You know, so we'll
Yeah.
see. I don't know.
Yeah.
I don't know.
The only thing I hear that is constant, and it reverberates sort of through all the different demographics, different age groups, social groups, whatever, is that housing's a major problem, and that um, you know, whether you're renting or you're paying mortgage, it takes so much of your disposable income to work out that line item in your budget
Yeah,
that
yeah,
you're not left with much. Uh,
no.
and if you either tighten the belts, or you do it American style where you take on credit and you pretend like nothing's happening.
Well, I think people have done that here too. Which is,
Yeah.
now the issue is, the equity is running out, so the hamster wheel is stopping. Like, it's like, okay, I'm going to take equity from my line of credit for my
Right.
home. Continually goes up. I can refi my way out of problems. Now, there's the problem is that, as you mentioned, housing is stagnant. Um,
Like, are you seeing a big drop in origination, like mortgage origination?
yeah, there's a drop in origination. There's a drop in, also, not activity, but there's a drop in, and not even affordability, because I think people can still afford things. There is a drop in, values, which does affect the opportunity to refinance. So there are people who, in the last 2 or 3 years, that might have bought, that have no opportunity to refinance, to get out of some debt. People that have been sitting on their homes for many years, that have equity, can offset some of those debts by taking a line of credit, or redoing the whole mortgage. But we are running into, it's been a push pull, I guess. A couple years ago, we had a lot of issues with appraisals. Then things got back. Now we have activity, but sometimes the appraisals are just not coming in where there's enough equity, or it's worthwhile
Right.
to pay for it. So, and unfortunately, our economy became so addicted to real estate that
Yeah.
it's a problem.
Yeah.
I see it as a challenge, and maybe that's what drives rates down a bit lower. But, and I think it was the new housing minister this week or last week mentioned building more affordable homes, but also keeping values kind of where they are. Because I think the boomer vote doesn't want their values to go down. So, you know,
And this minister is going to pull this off. How's he going to do this? Or
I don't know,
she?
they're going to build 500,000. I don't know what they're going to build. Prefab homes, green energy prefab homes.
I know here in Montreal, uh, I do a little bit of work around just looking at listings, and I know the property tax rates from being a homeowner myself, and also knowing people around the city and the different rates, and the cap rates are at zero. Like, you're not buying, if you're buying real estate and you're renting outside of Airbnb, which has become even more of a challenge, but just traditional renting. The only reason you would do that is if you expect real estate prices to increase, because your return on equity
Yeah, your return on equity is not.
maybe if you find something really nice, you might make 1% or two a year. I don't know, but
Yeah,
it's
yeah. You're hoping that you're going to get appreciation over time, but
yeah,
you're not making
yeah,
for sure.
yeah. And
So,
anecdotally, I mean, just from you know walking my dog, I do a lot of walking with the dog. It's like the amount of inventory out there is significantly higher than it has been the last 2 or 3 years.
100%.
Like,
Same here.
there's a lot of for sale signs, You know.
Same here. So I but there's not a lot of transactions happening because I think people are smart enough to bid below, and the people that are trying to sell are not budging on their prices, and who capitulates first is going to be the question. I don't know if
Yeah.
people can hold on long enough to not capitulate, and sometimes the bids disappear, or
Yeah.
or they show up
They
and
should. The
they just
government should introduce. Like the real victims of all of this is not our generation, because we were fortunate enough to be able to buy homes when they were far more affordable. It's the whatever the Gen Zs, maybe not the millennials, but the Gen Zs or something. Government should put together a policy where if you buy if it's your first home, if it's your first home that you're buying and it's like at a certain level, like, well, I don't know, let's say less than 500,000, or that they should be able to deduct their interest or a portion of their interest.
interesting. Yeah, maybe. Well, they get yeah. I guess.
That
Well,
makes
we're
housing
doing
a lot, it makes housing a lot more affordable.
yeah. Well, we're doing a lot of strategies. I'm pivoting a little bit to selling mortgages based on strategy because rates are rates. Rates are rates, and there are you're going to win some, you're going to lose some, but people focus on rate. But there are strategies out there um, that we're starting to implement with clients. One of them is cash damming, which is if you own a rental property, you're deducting we show people strategies how to deduct the interest on their primary residence by you know um, putting HELOCs on their homes. If you can't deduct any interest on your house because it's your primary residence, but if we set you up, or we're setting clients up with a mortgage with a readvanceable line of credit, and if you have a rental property, what we do is we take the rental income, we pay down the mortgage. So you've been essentially doubling up the mortgage payment, and the readvanceable line of credit opens up. And we take that line of credit and we pay the mortgage payments and expenses. And over time, you're converting your bad non-deductible debt into deductible debt. So there are ways of doing it, and we're starting to sell that strategy a little bit.
But wouldn't you then have a net negative um, income? You'd have a loss on that rental property, right? Because you're collecting revenue, but you're.
No, you're still paying it.
Oh, I see. You're.
You're turning your non-deductible debt on your primary residence. You're converting it into deductible debt because you're using the readvanceable line of credit to pay the full expenses of the rental. You can do the same thing if you want to invest in a dividend stock. Once you invest,
Right.
once you invest and you can earn income off it, it's taxable, right?
Right.
The issue we can't write off it's not taxable, our primary residence, but we can turn a portion of the primary residence if we convert the debt to a taxable type of debt. So we're doing a lot more strategies like this. So if Kevin and Barbanel had a rental, a condo rental.
You just basically take more mortgage debt off on your rental property, and
No,
you pay
nothing changes. The
and you
amount,
pay off your primary residence.
nothing changes. There's no net adding to anything. So if you have a primary residence, I'll give you an example.
Let's say I have a primary residence that's $1 million.
It's $1 million.
I have a $500,000 mortgage,
Yeah.
and I have a
So
rental property that's also $1 million. I have a $500,000 more.
okay, right. So what we would do, we would put a mortgage and a readvanceable line of credit on your primary residence. So let's
I
say
already have a mortgage.
you have a mortgage, but you need the product that is readvanceable. So you have a Scotia mortgage, I did it for you, right?
Yeah.
So I would change that, or I would go back to Scotia and say, give me a line of credit because you have a lot of equity. Give me a line of credit on it. So
On top of the mortgage.
on top of the mortgage. So
Right.
the way some of these lines of credit work is as you pay down the mortgage, the line of credit opens up.
Okay.
There's no difference in how much you owe. It's just it's one is a fixed mortgage and one is a home equity line of credit.
Okay.
Right? So you're going to get. I'm going to use 2,000 a month rental income on your on
On my
your on
property.
your
Yeah.
rent, and you pay 2,000 a month to your mortgage, right? Let's say. So we're going to take the 2,000 a month rental income, and we're going to prepay your mortgage by 2,000. You're going to also pay your regular mortgage payment of 2,000. So basically, you're paying 4,000 to your primary residence. So you're doubling up your payment. As you do that, essentially 2,000 opens up on the line of credit.
Right.
So I'm going to take 2,000 and I'm going to pay the mortgage on the rental plus the expenses.
Okay.
Right? So now I have a balance on my line of credit. That balance on the line of credit becomes tax deductible at your marginal tax rate
Why? It's on my home. It's on my principal residence.
because it's being used to fund something
Oh.
that is taxable.
Right. But why wouldn't you? What's the difference between just taking the revenue from my rental property and paying my mortgage on my rental property, deducting that interest?
Because this one is paying your primary faster
Okay.
and you're getting potentially you're going to get let's you're
More.
at a more you're paying it down faster and you're going to get the tax refund based on how much your whatever your marginal tax rate is.
Okay.
And so
Well,
people will, and then people
you've
will
done the
also,
math, so you know.
yeah, and then people will also, if you want to really optimize the strategy, people will also take the tax refund and prepay their mortgage. So if you're getting 24,000 a year in rent, let's say from your rental, you just made an extra 24,000 a year prepayment to your primary residence, right? And potentially you're going to write off the interest on the primary residence, which you couldn't before, get a tax refund and prepay even more.
Okay.
So we're doing those kind of strategies. We have calculators. We can show them when how fast you convert your debt from non-deductible to deductible debt. We can show what the net wealth effect will be. We show people what the effective rate will be based on your
Mhm.
marginal tax rate and how much you're writing off and all that kind of stuff. So
Yeah.
we're helping people, that way, but that's still for the more wealthy person that has a rental property, right?
Right. Yeah.
Like it's not like the
Yeah.
average person
Yeah.
is not
Yes.
taking in, but if we have come across people that have equity that are looking to pay off their mortgages faster, now we're kind of saying, why don't you buy a rental? They're cheaper now than they were before. We'll show you the strategy and blah, blah, blah.
Yeah.
So,
No, I mean, it sounds good. It sounds like a good.
yeah. So we got to sell strategy over rate. So,
Yeah.
um, but back to, I guess, our, conversation on the government. The last thing I wanted to kind of talk about was, I guess the relationship between Carney and Tiff McClellan. Like, do you find that will be any different than a typical, prime minister and a bank governor, or like obviously there's a skill set with Mark Carney that nobody else has. Whether you agree that he did a good job or not when he was
Yeah, I'm just thinking. I'm laughing because I'm laughing
like
at the.
when mixing, like they say, mixing church and state. Now we've got a guy that was actually in that role
Yeah.
prior as our
Well,
prime minister.
and also it's really interesting with the way that Trump is just completely, in a very obtuse, arrogant way, inserted him into the way he's come after Powell is like embarrassing. So it's interesting that because normally there is that iron curtain between
Yeah,
the central bank and the. I think that Carney is. I think that Carney is. He knows the importance of the independence of the bank, uh, but it is a bit different in Canada because the Bank of Canada is not like the Federal Reserve where it's independent, right?
Yeah,
Uh, I think he'll just sort of, let him do his job. Uh, Maybe if there's a crisis, hopefully we won't have a crisis, but I wouldn't worry too much about that.
right.
He's almost on his way out too, Macklin, isn't he? Do you know when his term ends?
No, you would know that better. I don't
It's
follow.
I think Carolyn Rogers will
You
probably
think
be.
she'll be the?
I hope so. I think she's very good.
I think so too. I think she was passed over. As much as Justin used to be proclaimed to be a feminist, he actually passed over a pretty good candidate to become Bank of Canada governor last time, right?
Who?
So I just said, like, Justin proclaimed to be a feminist, but when the time came to promote somebody to Bank of Canada governor, he promoted McClem, which was part of his Laurentian elite over Rogers, right? And,
Uh,
and Wilkins.
and Wilkins and Macklin was overlooked by Harper when he when
Yes.
he get when he instituted poll laws.
Yeah.
So that was a bit weird. I'm just on the bank's website. I'm trying to find what his term is, but I can't. Whatever. Yeah. So I don't. I'm not. I wouldn't worry too much about.
No. Okay. Well,
I
we'll
mean,
see.
I don't even know what. Even if Carney did interfere, like what that would. In what way would he interfere? Would he interfere more as a dove or a hawk or a guy for lower rates, for higher rates?
We'll see. Didn't really do much as a Bank of Canada governor. Didn't have to do much.
No, he lived.
Lived
Carney
through like zero, right?
governed both the Bank of England and the Bank of Canada during the modern monetary
Yeah. So
heydays of
we
zero
wouldn't
rate.
even know. We wouldn't even know kind of what his real stance is because he never had to do anything.
Yeah, yeah, yeah. He's actually like one of the last guys, central bankers from that time. Like Powell has been around a while, but Powell has now dealt with many years of higher rates, and he's I guess Lagarde is still in that boat of like these
Yeah.
crackpot economists, central bankers that believe there's no repercussions to having zero interest rates,
Yeah. Yeah.
and then they
Well,
scratch their heads when there's inflation.
yeah. Well, they are.
You know?
Um,
It's like Ronald Reagan said once. He said he goes, an economist is someone who observes something happening in real life and wonders if it can be replicated in theory.
right. Right. Yeah. Well, we've lived through a lot of these guys, people running our monetary policy, and um, that's been probably their motto.
Yeah, they're just yeah. Don't get me going on that. I'll need another hour.
We'll get to that the next time.
Yeah,
Um,
absolutely.
all right. Okay. I think we'll wind it up
Yeah,
here.
yeah,
It's good chatting with you. You're saying 50-50 chance, just a little bit under 50 for
yeah. A little bit under
June
50, I
4th.
would say.
June
Yeah,
4th. We'll see. We'll see what they do. I guess Parliament's going to
yeah. I mean, there's
reconvene.
still time. Yeah, it's also like very correlated to Donald Trump's trade policies, right? Which
Yeah,
are which
which
can change overnight. Like
yeah, that's the crazy part. That's
the
why
guy, the guy
that's
is
why
like he's not stable,
he's not stable. No.
and he could change anything, right?
Yeah.
So imagine if whatever he wakes up, in a bad mood, and next thing you know, he's
Yeah.
slapping tariffs on people, and the stock market's puking, and all of a sudden, everyone's whining for that we need interest rate cuts.
Right.
You know,
Right.
you know,
Yeah. Well, we'll see.
things change fast.
Things change fast. Well,
I
we'll
mean, I'm
see.
assuming the 3 month deadline on the, I think it's the end of July, the 3 month deadline for countries to renegotiate their trade agreements with the U.S. So I'm assuming that at some point in time between now and then, the markets will start to get nervous again around
Probably,
what's going to happen with tariffs, and
probably.
anything can happen.
Yeah.
They were pricing in the sort of heat or the heyday of that sort of 2 weeks of chaos post Liberation Day. They were pricing in 50% basis point moves in the U.S. like in the April meeting, and now they're not even pricing an ease until like the September meeting
Wow.
or the August meeting. Sorry, So
Wow.
the September August meeting, it's the late fall meeting. They're pricing in an ease, so the markets change fast.
Yeah.
Uh,
Wow.
Sorry, yeah, the September meeting. Yeah, September meeting.
Wow.
So
Wow.
you know,
Huh.
like
Interesting.
if they had, so we rallied in the S&P from 4,800 to 6,000 basically, right? It was like a 20% increase
Yeah. Yeah.
after a significant 20% drop or whatever.
Yeah.
Um, if we went back down, even halfway back down to where we were in April, I bet you that the Fed would ease at the June meeting because there's so much political pressure on him to ease,
Yeah.
and at some point in time he's going to fold.
Yeah. Well, we'll see. I mean, where we have hopefully some separation between, as we say, church and state, there's no separation there. I mean, Trump is all over him to.
I mean, he's held his own.
He's held his own pretty
ground.
well. Yeah.
Good for him. And Trump has been told to shut up by many people, like stop it, which he has, but he still can't help himself. At least
Yeah.
once a week, he's saying something about too
Yeah.
late Jerome, or
Yeah. Yeah. Well, we'll see. We'll catch up with you maybe after the June meeting, sometime
yeah,
maybe after CPI again in June, and we'll see what's going
yeah.
on there. And we'll have Carney. We'll have. I think they'll be back in Parliament at least for a little bit before their summer break. And see
When
if,
do they? When do they?
I
When do
think there's a meeting. I don't like saying I think, but I think the 26th or the 28th is when they come back. There'll be no budget, I guess, till the fall. I understand that. I mean, I know people are all up in arms. There's no budget, no budget. Hasn't been one all year, but how do you budget?
the Liberals don't even know what that means? Like,
No, they don't. But I think Carney knows. I think
ask
Carney
my
knows.
dog what he thinks the budget is. It's the same thing. He'd tilt his head like this, and his ears would flicker, and he'd be like,
Yeah, I think Carney probably understands what a budget is. Does he want to do one? Probably not. But I think he understands what one is. But I get it a little bit for now. There's a lot of moving parts, but at some point, you know, hopefully, he campaigned on being, the right person and prudence and knowing what,
yeah,
the adult in the room. Hopefully,
yeah. Just like
he
the
becomes it.
Republicans in the States, they campaigned on reducing the deficits and the net debt, and they're trying to get a bill through Congress that's going to add $5 trillion over the next decade.
Right, right, right. It's crazy. It's crazy.
Yeah,
That's all right. Buy Bitcoin, buddy. Buy some Bitcoin.
there's only two sure things in Canada. You know what they are?
What?
That the Leafs won't be playing hockey after the second round, and that the
Yes.
Liberals will blow through any budget you can give them.
We're gonna end on that. That's a pretty good line. I
I
think
wore my baby blue Leaf shirt for you.
Yeah. Okay, bud.
Yeah. All right, Brad.
Okay, thanks,
God
man.
bless. We'll
Appreciate it.
talk soon.
Take care, bud.
Okay.